Good evening, everybody. Today is Monday, May 9th, and this is week 4 of our advanced audit course. It looks like nobody has signed in, which is perfectly fine. Hopefully you're out enjoying this beautiful evening, one of the luxuries of online education, that you can watch this video at another time and hopefully be doing something enjoyable, but many of you may be stuck at work for one reason or another. So I want to go over what I usually do each week, just an overview of this week's deliverables, and then I will talk about the case study in detail. Hopefully you're finding the course to have a rhythm to it now, which again, hopefully is another reason why people aren't necessarily signing in. Let me see if I can find my share screen. This is always a little challenge. Hold on just a minute. See if that worked. Hi, Lisa. I see you just popped on. Thanks. I'm recording now, so I'll be going through the actual modules and then the case study. So here you'll find the week 4 overview. I just wanted to point out there was just a tad of confusion that I had not correctly updated this week's, or it was actually last week's deliverables. Please make sure, and I'll just take it from the top, we have our conference call tonight. If you can't sign in, the requirement is still that you're watching this video, and I say watch any supplemental videos in the module. So, you know, I am kind of getting quite a few repeat questions that I know I've stated in a video or might be stated elsewhere. So just make sure, you know, I certainly am here to answer any questions that you have, but make sure to watch the videos and do the readings because a lot of the questions might be answered that way. Preparing your self-review at the end of the chapter, those questions, and post those in Canvas. Choosing one article. Everybody's been doing a phenomenal job with their articles. And then make sure that you're posting to 5 student submissions. You may read, you know, when it was last semester, I had a smaller class, so they were posting to each student submissions, and they were ranking each other, and I took that out of this course. So 5 student submissions, no rankings, just your viewpoints. Please make sure that they're at least 150 words. I am taking points off. If they're not, you know, 2 sentences is certainly not sufficient. So make sure that, you know, 150 words, 3 to 4 sentences, you know, is a strong discussion. And make sure to use the rubric if you have any questions about, you know, what the readings, the summaries actually should entail. Now we're on to module 3 of CPA Excel. So here you'll do the full chapter, every 4th multiple choice question, and I should say and simulation. If you don't see it here, please, I've said this a bunch of times, it's the multiple choice and the simulations. The syllabus, you know, states that, and I mean, that is the requirement. And then complete the case 3 simulation. So hopefully that rhythm, again, is feeling comfortable for you. And again, everybody's doing a great job overall, so I'm very pleased. If you look at the module for the week, you'll see videos to the actual this week's chapter. So we're on to internal control and the external audit. So make sure that you're actually submitting everything here, but you can see the learning objectives. I have 2 videos that, you know, I take a lot of time. You have 1 chapter this week, but I've done 2 separate videos just to give you kind of a break as I'm discussing. And they are PowerPoints, but, you know, I'm explaining things in my own words than the way the book says them. So hopefully you're finding benefit to that. But it's learning objectives. At the end of the week, you should be able to go back to these 14 learning objectives and feel like you've understood what they mean. You know, I don't assume right now on day 1 of the week you're going to pull these open and know what they mean, but after you watch the videos, after you do the readings, after you do your self-reviews, that gives you a good foundation then to be able to critique an article and certainly do the case simulation. So watch my videos about these, but the main essence of this chapter is regarding internal controls. And I'm going to pop into the actual simulation here for week 4. So here's our simulation. I say you can post here. So make sure you're posting right into Canvas. Let's have this download. Actually, let me make sure that you can still see my screen here. Nope, you can't. Hold on just a second. All right, so here's case 3. Now for case 3, again, we're doing the internal control understanding. I'm going to read this because it really gives you a nice background. So prior to the start of any audit, you must obtain an understanding of your client's internal controls over the accounts that you've deemed significant based on the risk for material misstatement. And when I say the start of any audit, I mean really the field work. Before you start collecting evidence, you need to understand your client's internal controls. What are internal controls? These are the controls that are in place to help mitigate risk. So the easiest one to think through would be a cash account. If you have cash on hand, what controls in place do you have to prevent somebody from misappropriating the assets or misreporting the assets? So, what do you have in place to make sure somebody's not going to steal your cash? You have some segregation of duties, right? The person who maybe collects the cash isn't the one writing off the client account balances, or the person who's making journal entries doesn't have access to the checkbook. The person who receives the bank statements doesn't have access to the cash. All of these things are internal controls that are in place to make sure that cash is properly stated. You can have sign-offs of reconciliation. So within an accounting department, the cash reconciliation is very basic for any single organization. So somebody prepares it, somebody else reviews the reconciliation to make sure that there aren't any errors. So internal controls are not only in place to prevent fraud, but they are also in place to help prevent any errors from happening. We're all human. I mean, you saw that I had not included simulation in one of my write-ups. I did it and I missed it. Nobody is perfect. That's the reason to have a preparer and a reviewer type role in an audit, that somebody prepares something, somebody reviews something. That is a very good internal control system. And so when you're setting up your actual planning, think about what you've done so far. You've picked your client. You've done an analytical review over the accounts in a ratio analysis to understand what accounts are, new and large and changing. You've done a risk assessment over one account, but you would typically do that over every single account. Last week, you start to understand your client even further. Now you're looking at the internal controls. When you watch my video, I go through this quite significantly. I say, in order to obtain an understanding of your client's internal controls, you can have them provide you with an understanding of the controls, or you can inquire with the client directly. So picture yourself going out to the client on day 1 of the audit. You could ask them to document their controls over a specific account. And your job is to make sure that what they've said is correct. There are a number of ways to get this document. It can be narrative. I actually prefer narrative, where you're telling the story of a particular account. So sticking with cash, you have this cash account. You can say, Jane is responsible for income and cash. She puts a log together of all of the income and cash. Somebody else makes the deposit. Then we have somebody from the accounts receivable department receiving the updates of which cash payments have come in. And then the accounting department makes the adjusting journal entry and reconciles the cash, accounts receivable, and accounting do not have any direct cash relations. So you can see it's a story, right? A narrative. Some people prefer flowcharts where you can literally say, here's the incoming cash. It went from here to there. Then we made these changes in the system and so on. It's a little more of a picture. And then questionnaires. Your book actually doesn't mention questionnaires, but it is actually a valid way where you're just saying, is cash independent from the accounting department? Yes or no? Yes. And you're going through all of these questions. Again, my preference is narrative, but all three are acceptable. So once you get that understanding, either sitting with the client and literally talking it out with them, what the internal controls are, or more sophisticated companies already have these kind of in their system, especially, you can see my note up on top. If you're auditing a public company, you need to not only understand the internal controls, you also need to test the internal controls. So make sure, this is a big thing, a big takeaway for this class, make sure that you understand this difference here when I'm talking about it. If you are understanding the internal controls, you're doing these write-ups, and then you can see I'm saying that you need to do a cradle to grave walkthrough. So a walkthrough is actually walking through the cycle from beginning to end to make sure what the client has said is correct. But if you're on a public company, you actually have to test those controls too. So you're finding evidence of sign-offs, you're finding evidence of reconciliation, you're finding evidence of matching principles, and all of these things. So again, if you're a private company, you're auditing a private company, you still have to understand the controls and document them through a narrative, flowchart, or questionnaire. You need to do a walkthrough of those controls to make sure that the client actually is correct in what they're saying. What if they just gave you a bunch of baloney and they're like, yeah, we're doing all this stuff, and you take that for face value when in fact they're not? Giving you the opportunity to walk through to see the documentation in place is even for private companies, but if you're a public company, you're doing, we call it a test of controls. So I give some more information. You can read through that paragraph. Once you identify all of the internal controls and have done a walkthrough, it's your job as the auditor to determine whether or not there are any deficiencies. So maybe you have found that nobody is reviewing the reconciliation after the accounting clerk prepares the cash reconciliation. I would say that that's probably a control deficiency, that it could be improved. The actual reconciliation is in place, but it's just missing that next level of control. And a lot of times with small organizations, they don't have the manpower to do, those prepared and reviewer type checks and balances. As an auditor, you still have to identify that as a deficiency. And there's kind of a term that we say, what's the compensating control? So maybe the CFO, even though he doesn't review the reconciliation in detail, he still looks at the bank statement or something, that there's some compensating control in place. So when you think about these three levels of deficiencies, when you're actually evaluating your internal control structure, control deficiency is very kind of small level. Something could be improved, but it's not really going to make or break the company. And I have a whole video on these levels of deficiencies, so please watch the video for more detail on them. And number two, a significant deficiency is usually when it's lacking a couple of controls within the same process. So maybe the person receiving cash is also recording the cash and also making a journal entry. I might even bump that up to material weakness, depending on the size, but that would definitely be more of a significant deficiency level. So something that it's pretty severe, that the company probably should do something to change their control structure to improve it. Significant deficiencies and beyond need to be reported to the audit committee and to management, whereas control deficiencies don't really need to go into a letter of any sort. But in number 3, if you're experiencing a material weakness, that is very significant and something that actually gets reported to shareholders in a public environment. So what would a material weakness be? Maybe they, the same person's doing everything, that they're receiving the money, they're paying the bills, they're making the journal entries, they're reconciling, and there's no overview at all. A lot of times with material weaknesses, it might be system issues. And I'll be honest, in my experience, I've never had to issue a material weakness. Anything that, would have rose to that level, we were able to find a compensating control or something to put in place so that the client didn't have a material weakness. But it's important to put these into categories so that it just helps kind of think about the different levels of these in terms of categories. So again, before you start this case, go through chapter 10, watch my videos on chapter 10. I go into a lot of detail before you start this case so that you really have a good sense of the internal control structures. But for this case, what I'm asking for is for you to do a narrative in this case at your place of employment, about your place of employment, because you probably know it pretty well. So the requirement is that you write a 1-page paper with this narrative documentation of your understanding of the control procedure and evaluation of any deficiencies within this process. You can't do this on the public company that you've chosen because we just don't have the internal control information to be able to do this. So let's say, you're working at a bank and you want to walk through the loan receivable process, or maybe I'll just stick with cash, the cash process. So you may have to talk to somebody in your department to help you understand the control process. I know there are some of you in this class that may not be working in an accounting role. This doesn't matter. I've had students, especially in undergrad, think about internal controls, and we've had big discussions, just on what goes wrong working at Dunkin' Donuts and, the cash controls there. How does somebody get free food? What controls could be put in place to prevent that from happening. So you don't need to think about this at the highest level and most complicated level of your organization. Do something that you're familiar with, ideally in a place of your current employment or previous employment. Maybe you were part of identifying an issue and you maybe didn't know enough that you were putting a control in place. So think about this. I'm only asking for 1 page, but I want a narrative, and I do want you to be thinking about a deficiency. So, think about a narrative and a process over an account balance that does have a deficiency that you're aware of currently that's being worked on, or that you've known of in the past. And then evaluate whether you think it's a control deficiency, significant deficiency, or a material weakness. So some easier cycles, would be cash. And what you really need to think about is the impact that it has on the financial statements, because that is what you're auditing, the financial statements. So you are saying whatever write-up you're doing, make sure it links to something in the financial statements. I don't want it to be a real compliance issue per se, but I'll give you an example. My mom is a medical coder, and when she talks about the auditors coming in, I know they're not the financial statement auditors, they're the compliance auditors, but she is under the finance department at her organization. And if the coding isn't done right, the billing isn't done right, and that has a huge impact on revenue. So even if you're, whatever area you're actually thinking of, make sure it has a connection to what, line item would be on the balance sheet or an income statement. So is it an expense issue? Is it a revenue issue? Is it, an asset issue where you're concerned about, theft of inventory or cash? Those are really the hot areas to look out. Payroll is big. I think somebody in this class works in the payroll department, and think about that. Imagine the person who does payroll, if they're able to input new employees, they're the ones responsible for processing everything. Maybe they're even making the general ledger entry. They have access to direct deposit and they're issuing the checks. Okay, well, that's a big issue, because what if they just created a fictitious employee and another check is going to their house, right? So that's actually the process that I just described, aside from the general ledger entry, is actually pretty typical, but you look for compensating controls. So somebody needs to be looking at the payroll records, right? Somebody outside of the payroll function. So maybe it's the controller of an organization looks to say, okay, I recognize all of these employee names on the payroll list, or ADP is a great payroll processor. Many of you are probably aware of ADP, that they have change reports. So anytime something changes in the payroll, let's say this payroll manager, they're going to keep their name on the list because they know that the controller, all they're looking at is for new names. What if the payroll person decides to give themselves a 20% raise? A payroll change report should also be reviewed by somebody outside of the payroll function. So if the payroll clerk's playing around with their payroll, you're going to see that on the payroll report and realize that that's not really appropriate. Another thing that I would do at the end of the audit anyways, I'd have the CFO review the annual salaries to begin with. So every employee would be listed, and they would just scan down the list to make sure that their annual salaries seemed appropriate. So let's say if the payroll clerk, is normally making $65,000, $70,000, and all of a sudden the CFO sees that this year they got paid $120,000, that would be a red flag. So maybe the payroll person has a lot of access over payroll, but putting in those compensating controls where somebody else is reviewing a higher level report mitigates that risk and a potential material weakness or significant deficiency. So again, this one, this is not a cookie cutter, right or wrong case study. As you've seen with these, I want you to think through where you're working, what issues do you think could be potentially in an actual accounting flow, bringing it back to how it affects the financial statements. So when you're selecting a control to understand, it needs to be directly related back to the financial statements, as if we were conducting the financial statement audit. Now, keep in mind, I'm asking you to do one narrative and identify, a deficiency. You would do something similar for every account that is considered significant. And for the bigger companies, that could be a lot of accounts that you're doing this walkthrough, you're understanding the controls, and at a high level, you're trying to think, okay, is there an issue here? And this is when I know this class is not only for public accounting students, but also for forensic accounting students. You have to think kind of like a criminal. How could somebody get away with something? That was always my question when I was auditing. How could they do it? Why would they do it? What were the areas that somebody would find valuable? Inventory or cash, or wire transfers were a big one, payroll, thinking of those things. The other thing to keep in mind is financial performance. So when you're thinking about internal controls, something to think about is the CFO's salary should not be related to what? To financial performance, because the CFO is the one who is making many of the financial decisions for the company. So if their bonus is linked to financial performance, it would be very easy for a CFO, theoretically, to make revenue look a little better this year, or make the expenses down a little bit, just kind of manipulating assets. I go through a lot of case studies in my undergraduate audit class, but some of the more famous ones, I can post some videos actually about, Enron and that whole misappropriation of assets. Why were they showing expenses, or why were they showing debt off the balance sheet, right? They wanted a stronger balance sheet. Why did they want a stronger balance sheet? So investors would keep investing in them and they make a ton of money. If you think about WorldComp, they were showing things that should have been expensed hidden in prepaid assets. Why did they do that? One, the assets look stronger. Two, the expenses were lower, therefore net income was higher, and therefore investors made better investments in the company, more investments. There was it goes back into the 80s, ZZZ Best carpet cleaning. All of these, you can even look up, YouTube videos about them. They're interesting. He had fictitious insurance claims on carpet cleaning. So he made up fictitious documentation, sent it into insurance companies, and insurance companies were paying these outrageous amounts for services that were never actually performed. That increased his revenue, so on. So you can see, these incentives for committing fraud, and our job as the auditor is to block it. I post in here, in one of my videos, the fraud triangle. And the fraud triangle, and I don't want to spend too much time on it because I do have it in one of my videos, but if you think of a triangle and you have incentive, rationale, and opportunity, and actually I'll just put up a note so you can see it, but I do have a good video on it. Let me just see, I'll show you my notepad. Hold on just a second. Hold on just a second, I'm trying to share my notepad here. So if you picture a triangle, okay, and you have incentive, don't mind this, it's really hard to write on this. Incentive. They, again, have a good video on the fraud triangle, but you get the picture. Incentive. Actually, I think there's a text box. That's probably better. Okay, so we have incentive. This is, my daughter is almost 5 and she's still learning how to write, so my print looks like hers right there. We have rationale and opportunity. Here we have opportunity. So the idea with this fraud triangle is, why do people commit fraud? And there's some incentive to do it, right? They're going to get paid money. There's some usually financial impact on committing fraud, right? Otherwise, why would you do it? Although, again, you could say maybe it's to keep the job, whatever, but there's an incentive to commit the fraud. I personally don't think people who, start committing fraud are horrendous people. What I think is, with this rationalization, they're able to rationalize the reason to do it. So what about people, who are working in, maybe not the high level positions? They're like, I'm just going to do it as one time because my family really needs groceries this week. And I'm just going to take this little bit of money and I'll never do it again. Right? Think of it on a big level. And this is what had happened, with the Enrons of the world, that they said, well, our earnings are down this this month or this quarter. Let's just manipulate them a little bit just this one time. We're never going to do it again. Right? I'm not a crook. I'm not a bad person. We're just going to do it this one time. On the one time, they're like, well, maybe we'll just do it again because, I don't know, nobody seems to care and people have made money off of the deal or so on. Or think about little mom and pop shops where, maybe the owners are making a ton of money and you're not, and you're like, they can afford it, right? They make a ton of money. I don't. I'm just going to take a little bit from the register and I deserve it. You can see how people can rationalize fraud. Our job as the auditor is to prevent it from happening. So here's where the opportunity is. Well, how did somebody have the opportunity to commit this fraud? It is our job to mitigate the opportunity by making sure that the internal controls are in place. So no matter what the incentive or rationale for doing it is, there's no way that they could do it. And that was always my mindset. How could they do it? Even if it's the nicest person ever in the whole world, how could they do it? And I'd be thinking through the internal control structure to say, there's no way. There's no way somebody could, take the inventory or, be committing inappropriate wire transfers or manipulating the financial statements, because I've looked at these internal controls and they are solid and in place. So that's what you need to be thinking about as you're doing this work paper. And hopefully, you find an area of interest that you've wanted to investigate. You may need to do a little bit of discussion at your current job if possible, but it's not required. Kind of do what you can based on what you know, and that would be sufficient. So again, 1-page narrative describing control process and thinking about deficiency within the process and evaluating that deficiency as to whether or not it's a control deficiency, significant deficiency, or material weakness. So that is it for this week in terms of the case study. Students have liked this in the past and students have really gotten into this. If you're having a hard time figuring out which process, we should talk about it. And usually we can come up with, something that you've had experience doing. And again, it could be in any position, even, a high school job, that you've had that something, could have happened. Walk through the process and explain where the deficiency lies. So I'm going to sign off the broadcast. I know Lisa's on this call, so I'll open the floor to any questions after my call. So I'll stop the broadcast. But during the week, should you have any questions, please contact me so we can talk about them. I'm available to you and want you to do well on these case studies and other deliverables, but just, don't hesitate to reach out to me with any questions that you may have. But I hope everybody's having a good week. We're week 4, so 3 weeks to go. We're cruising right along. Keep up with the work. Falling behind would be, the worst kind of situation to be in. Just let me know if you have any questions. Take care.